Hello traders, and welcome back to the Forex Geek. In today's video we're going to delve into the Bullish Doji Star candlestick pattern, which is a powerful tool to add to your trading arsenal. This trade candle formation can signal a potential trend reversal, offering lucrative opportunities in the Forex market. So understanding this pattern is crucial for identifying key entry points and managing risk effectively. So as we will explore its structure and psychology, you'll gain valuable insights to enhance your trading strategy. So stay tuned until the end of this video to learn how to spot and capitalize on this pattern in live market conditions. So let's unlock the secrets of the Bullish Doji Star and elevate your Forex trading game. So without wasting much of your time, let's get started. This is a TradingView platform and we are on the daily chart on GBP/USD. I'm just gonna explain the Bullish Doji Star candlestick with this illustration, and let's get started. The Bullish Doji Star pattern is a trade candle formation that signals a potential trend reversal in a downtrend. This means that we must have been bearish already, or maybe a reversal or a pullback before spotting this candlestick pattern. So this is just for added context. This additional candle, I just want to illustrate that we were initially bearish. So a doji is a single candlestick pattern formed when the opening and closing prices of a security are equal or very close to each other. So this creates a candlestick with a very small body or no body at all, resembling a cross or plus sign. So the doji represents a moment of indecision in the market where neither buyers nor sellers have gained the upper hand during that session. This is the doji candlestick, and these three candlesticks make up the Bullish Doji Star pattern. So each component plays a crucial role in indicating the shift from bearish to bullish sentiment. So the structure of the Bullish Doji Star pattern is as follows. The first candle, which is this red one, this red, let me delete this candle. But it's important to know that we should be in a bearish trend or in a reversal or pullback before trying to spot this Bullish Doji Star pattern. So the first candle, which is this red candle right here, should be a long black or bearish candle or red candle representing strong selling pressure. And the second candle is a doji, and this doji gaps below the first candle's body, and the doji indicates indecision in the market. It's not quite almost like it must gap, but with the gap, if you see the gap, that means is valid, is more valid than the doji being without the gap between the first candle and that doji. So the third candle is a strong bullish candle, as you can see here, and this candle closes well into the body of the first candle, confirming the reversal from bearish to bullish. So this pattern's reliability stems from its ability to capture the precise moments when market sentiment shifts. The long bearish candle shows that the bear's final push. The doji represents a balance between buying and selling pressure, and the bullish candle confirms the bulls taking control. So let's look for this on the chart to give a proper explanation. I'm just gonna try to look for this candlestick pattern on the chart. So stay with me as I look for this pattern. Okay, so this should be all right. Now look at this candle. Look at this example here. We are bullish, but we had a pullback. Having pullbacks, bullish pullbacks. This was a pullback before the continuation of that bullish trend. So how are we going to know that this pullback is done and we should be looking for the push to the upside? we were able to discover that using the Bullish Doji Star candlestick pattern. You can see the initial red candle, then the doji. It resembles a plus sign where neither buyers nor sellers were winning in this case. And you see the bullish candle which gapped above the first candle, showing that the buyers are now taking in control. And you can see the volume confirming that. See this strong buy volume on that day, on that candle. And after that, we could see the push to the upside. Here's another example, and this was used for continuation. You can see the red candle, the doji, and then the third candle closing above. It's not the most close above, but it should close well into the body of the first candle or above it. So that gave us confirmation for a bullish doji star pattern. And after that, we are clean to enter a buy trade. So let's talk about the trading strategy you can use while trading the bullish doji star. So the first is to wait for the third candle to close, confirming the pattern's completion, and this ensures that the reversal is validated before entering a trade. Alternatively, enter after a bullish confirmation candle following the pattern, and this additional confirmation can increase the reliability of the signal. So for example, as we had this push to the upside, we should wait for the next candle to close above this confirmation candle. Closing above it, then we have our sign to enter this trade. We could enter at the close or at the opening of the next candle. Stop loss should be below this bullish doji star candlestick pattern, the entire pattern, or below the doji candle, the middle candle, the second candle. Take profits could be 1:2 or 1:1, or you could also use trailing stop losses. And also for this example, you can see the third candle closing above our confirmation candle here, showing us that yes, it is time to enter, and we should be looking to enter at the opening of the fourth candle, actually, after that confirmation, with our stop loss just below the bullish doji star candlestick pattern, and take profits at preferred levels. Could be 1:2, could be 1:3, and this was another example. We had this sharp push to the downside. We had the doji, then a bullish push closing well into the body of the first candle, and after that we had this pullback, then the candle closing above it. Let's see, that large green candle finally closed above that level, and we could consider entering a trade here. Just stop loss just below the bullish doji star candlestick pattern, and you can see the rise in volume, showing us that yes, we should be looking for buying opportunities in the market. And after that, you can see price giving us the push to the upside. Take profit levels could be at that this resistance level here, or you could target a 1:3 or 1:2, whichever one you are comfortable with. And check if we're gonna see one more example before we call it a wrap. Just gonna look for one more example. Okay, look at this. So I had these red candles. This the first candle, the doji in the middle, and the third candle which gapped to close here. And you have the next candle giving us a good confirmation, closing well above the confirmation candle, the third candle, and that's a sign to enter this trade at the opening of this fourth candle. And your stop loss could be below this low, and take profit levels could be at a 1:1 or 1:2. This was used as a confirmation. If you are an aggressive trader, you could just enter at the opening of that fourth candle or at the close. So, and you can see the increasing volume. It corresponds with the volume here, and that was how we were able to catch that buy trade before we had the massive reversal. And check if we're gonna see one more example of the bullish Doji Star candlestick pattern. So look at this one. This one falls in line with the well-known area of resistance that turned support. So you see price here was used as resistance. This area was used as resistance before it turned support right here. And you can see the bullish Doji Star candlestick pattern here, the first candle, the doji in the middle, and the third candle closing above that first candle. Have the confirmation with this candle closing above the third candle. Could enter here, the stop loss here, and take profit levels could be at this swing high or that resistance level. And that's how we're able to catch a 1:3 trade right there. So one thing you should always consider is volume confirmations. Always use volume to confirm your trades. Watch for the rise in volume to confirm your signals, and higher volume can validate the strength of the reversal and increase the likelihood of a successful trade. Also, you should consider risk management. Limit your risk per trade to 1 to 2% of your total trading capital. Aim for a minimum risk to reward ratio of 1:2 or better. This ensures that your potential profits outweigh your potential losses, so contributing to long-term trading success. So right, traders, we've come to the end of today's video. Remember, successful trading requires more than just pattern recognition. It demands discipline, continuous learning, and sound risk management. So as you incorporate the bullish Doji Star into your trading approach, always consider the broader market context and use it in conjunction with other technical indicators like your moving average or your RSI, your MACD, and so on. So if you found this video helpful, please hit the like button and subscribe to our channel. Don't forget to turn on the notification bells to stay updated with our latest Forex trading insights and strategies. Happy trading, and we'll see you in the next video.